So it really takes 3 points for us to consistently establish support and resistance that we can use to buy and sell from. Because what's going to happen here is once we have this point and this point, we're anticipating that price is going to react off of this low. So this becomes really our first trading opportunity with consistency. Then there's another point, there's another point, there's another point. And the reality is we don't know how long price will remain in some form of consolidation. So it's our job to make sure that we recognize when conditions allow this. Because the real trick with trading support resistance is, this is horizontal. But we're going to take support and resistance from horizontal levels and just turn them on an angle, and you're going to see price action do the same thing. So case in point would be, let's say that we identify a low and a high. Now let's say that this market comes down and establishes a new low. Now some traders might be looking at this vertically and saying, okay, high, low, lower low, but where do we go? The reality is we might just go a little bit lower and establish some type of channel. So this becomes point number 1. Point number 2 is the pullback. Point number 3, look, sellers are clearly pressuring this market to go to the downside. But there are a lot of range-bound conditions. If you're looking for higher time frame movement, your trends are going to be few and far between. So we have to learn how to trade this type of structure. And right now, in 2019, you could be watching this video 2 years from now, and conditions are going to change. But when we see range-bound conditions, we need to be traders that can take advantage of that. Otherwise, we're only looking for one direction that suits our eye rather than us conforming to what the market conditions are allowing us to trade. If we see ranges, we should be able to trade them. If we see trends, we should be able to trade them. In my opinion, that's what it takes to be a well-rounded trader. So if we have point 1, point 2, point number 3, now remember, we can still sell from point number 2, right? If we have our high to low, we can anticipate, let's say that this is a nice, beautiful 50% retracement, and we can sell that. Okay, great. Well, let's sell it. Let's take some profit down once the bears score a point at this low. But what happens? Once the bears score a point, we get a pullback. What is the direction? If we can establish a pullback here and trade back up, now, we can either trade this structure, meaning that we're looking to buy low in 3, or because we might have an established downtrend, we may want to focus only on selling and selling and selling. And we can be a little bit more flexible, a little bit more aggressive on selling down to new lows, down to new lows, and down to new lows. And again, after all of this structure continues to play out, and again, you're connecting the dots. If you have 1, 2, 3, take the angle. This is my personal trick to draw trend lines and channels. Take the angle, connect the lows, there's your trend line. All right, so we're going to take a trend line right here. We're going to take this trend line and clone it. So you copy this trend line and take this point and make it the exact same angle. Now we have an anticipated level of resistance, right? This is our support level, this is our resistance level, and now we're looking to sell and sell again and sell again. So this would be 4 to 5, this would be 6 to 7, and 8 to 9, and this can continue until you go far enough down that there's probably some massive structure down here, and then we find more of a big long-term previous resistance or previous support becomes another bouncing point for some type of corrective wave that way. Okay? But in some capacity, we need to establish point 1, point 2. The third point is one that we're looking to trade or connect the dots. So if you can take anything from this video, it's on the connect the dots, we take point 1 and 3, draw our line. And we take that line, make it parallel, or clone that line, copy that line, and give us a parallel structure. You will be shocked to see how often price stays in some type of consolidation. Now, if this was our direction, some traders might look at this structure and say, well, I'm going to buy there and sell there and buy there and sell there. I would say, look, if we have a pretty firm downtrend, it's probably better for us to expect the market to stay in a downtrend, making lower highs and lower lows, and we can get more aggressive in this area and in this area and in this area. We can sell that structure. We can plan on we sell and then we score a point. We sell, we score a point. We can be more aggressive in that trend. We can have a limited stop loss area and a nice return on our risk, right? So risk up here, reward, score a point. We're certainly trying to set up the best possible surplus, all right? So if we're sideways, meaning, we're going horizontal, or if we have an angle, structure is going to look the same. So I'm just going to go ahead and draw this. If we have our sideways move, we have point 1, point 2. Once we are anticipating, this is going to be our anticipated point 3. From there, we draw the line, stretch that out, clone that line, go up here to this previous high. Now we have established support and resistance. If it's the opposite move, let's say that we're going up to point 1 and down to point 2, right? We take this area off the high, off the low, and we're anticipating point 3 right there. And we're anticipating point 4 right here. Okay? So whether we're going up into this move or down into this move or just simply going sideways, we have to establish our 3 points. And then we can connect the lines, connect the dots, and see that structure. If we take that and we put it on an angle, it's the same principle, the same foundation. Now we're just using this structure. So if this is, downtrend to point 1, point 2, here, we might be looking at horizontal levels at first. But you can see that if we're going to stay in some downward channel, then we go from point 1, point 2, this comes down lower. This becomes point 3 if, of course, price behaves and reacts off of that, comes back up. Then we're anticipating point number 4. Now with a downward move, I would be more inclined to sell and score a point. And wait again and sell and score a point. Wait again, sell and score a point. If this is a higher time frame, then we can buy and sell, because there will be big enough moves here that on a smaller time frame, that might be a larger trend, maybe an irrational trend, maybe we get some points to buy. But again, the trend is your friend. We've heard that saying. It is true. The easiest way to trade is in the direction of the largest momentum. And if we can load up trades here with limited risk, high reward, that's a great trade. Let's flip that around. Take the same principle, the same foundation, okay, and we have a movement here, establishes a high, pulls back, establishes a low. Now, again, you might start off thinking that we're going to have some horizontal levels. But if we go higher, okay, if this starts to fall dramatically, there's only a couple spots this is going to react from. This is either going to come back to this point and be a bounce, or this is coming all the way back down, and now you have parallel lines connecting points 1 to 3, 2 to 4. And in this uptrend, you're going to look to buy, right? We can buy that continuation here. And then we have another rejection. This would be 4 to 5. We come back again. This would be 0.6 to 7. And we stay in some type of channel-like movement. So 4 to 5, 6 to 7. All right, but it's points 1, 2, and 3 that we're looking for to establish some type of connected channel. Over the last couple of years especially, there has been more and more channel-bound trading. And I think the reason why is because traders, traders anticipate highs and lows. As traders are getting more technically savvy with analysis, they're trying to spot highs and lows. The thing that traders do a disservice on to themselves is, number one, they just trade too big. They don't really give themselves any flexibility. And, keep an eye on the left-hand side of the chart. If we see momentum carrying us into that trend or channel, then more than likely we're going to have some type of channel to the upside. So this could be our upswing. We have pullbacks. We have parallel movement this way. We could pull back here into deeper channel levels. But if you go through your charts, and we're going to get into the charts here in a little bit, but if you go into your charts, don't be surprised to establish some type of consistent structure on higher time frames. And the best part about all of this, the whole point behind this lesson, is establishing support and resistance. We can trade. We can buy low using support. We can sell high using resistance. So that brings me to one more thing I want to draw on this chart, on this whiteboard, and that is this. It's price action in and around this support and resistance stuff. Okay? So this is a little bit of a sneak peek because I actually had a specific module based on price action, but how we tie this all into support and resistance, how this all gets tied into trend lines, here's a little sneak peek. So let's say that we have horizontal support and resistance, or you can have, as I mentioned, you can have angled support and resistance this way, angled support and resistance this way. You can even have consolidation patterns. You can have wedges that we can buy and sell from. You can have broadening formations that you can buy and sell from, right? Structure is all over the place. We're just trying to find ways to trade it. But this is what I like. Once we establish our point 1, point 2, and we're looking for this first level to sell from or this first level to buy from, here's what we need to see with price, okay? I want to see price cooperate. As I mentioned earlier, I love down here at these lows. I love big rejection candles. Big indecision candles that you might not notice on a smaller time frame. If you're on, let's say you're a futures trader looking at structure, if you look at an hour chart, that could be enough to give you the answer right there. If we have some intermediate structure during the day, if we can't close below this over the course of the first hour or the first couple of hours of morning trading or afternoon trading, we're going to be range bound. But on a smaller time frame, you can have the precision to buy low, get confirmation to the upside, and take it up to some type of structure. I love those indecision candles. Okay? I will even go as far as saying this. If we're expecting support and resistance, I might even see price close lower. But rather than saying, okay, deal's off, it's going lower, rather than one candle being that decisive move that's breaking support, it needs one additional candle. So one break is not a deal breaker. Okay, one break means if we see indecision, the next candle is the tell. Because the next candle, if it goes lower, then sure, it wasn't meant to be. We're breaking these lows, we're going to pull back, and then we'll fall. But if the second candle here, if we have indecision, and then price ends up pulling back or going bullish back into the range where this is support and this is resistance, what would you do here? You can buy that level, your stop area below, and you go after your profits, right? You're trading support, you're trading resistance, you're letting the market noise just do what it needs to do, right? Clearly there's traders down here that are buying here with stop losses super tight. They all get stopped out. They all complain that the market went my way after I got stopped out, blah, 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 blah. Excuse, excuse, excuse. We don't have excuses in trading, okay? We're either right or we're wrong. So if we have a close below, it's the second candle. It's not the first one. If it closes again lower, then look, we shouldn't be holding on to buy trades. We should probably respect the fact that it's going to pull back or just keep going lower, and we trade that structure to the downside because this could be a continuation. If we fail to have much continuation, which would mean one candle here, indecision, or one candle here and bullish. Let's say bearish on the way down, bullish on the way up. Okay? That's a nice little disagreement where bears and bulls are fighting at support. So we can look at trading that back up. And the same thing is true at resistance. All right, if we see indecision, I love indecision candles. If we have decision but we can't follow through, if this is bullish and this is bearish, then we're looking to trade it back down, trade resistance to support. Okay? So, obviously in theory, it's easy to draw this all out on a whiteboard, but what I want to do now is go into the charts, show you some examples on structure, and let's get a feel for what this does on a bunch of different instruments and a bunch of different time frames.